That's exactly it. We think the market has priced in a deeper recession. At the market lows, it was down about 23% for the S&P, and for the Nasdaq, it was down about 35 to 40%. So it's priced a lot of those negative things in. We think the economy is not great, but we think you probably have a modest recession, or you might even be able to have a soft landing. In either of those cases, we think stocks could be nicely higher 9 to 12 months out.
Wouldn't it be unusual, though, for us to bottom before the recession begins? I think there's most of the time we are sort of bottoming halfway, two-thirds of the way through the actual event.
Usually that's the case, but a lot of times the market will sell off about 9 months after the economy peaks and then starts to recover. In this case, the economy peaked about 13, 14 months ago. So from that calendar, it actually makes sense that the market maybe bottomed out last fall, last winter, and is starting to do better. And quite possibly in hindsight, the economy did have some very negative periods or very weak periods a quarter or two ago,
right,
or a few months ago. So we think it will be a lot clearer 6 to 9 months after the fact. Usually bear markets bottom, you have a significant rally, everybody's scratching their head, and it doesn't seem to make sense. It seems the market's gotten way ahead of itself. 6, 9 months later, you say, okay, now I understand it.
Would you change your tune if you started seeing jobless claims rise or payrolls go negative?
We think that last month's number was an outlier. We don't think the economy is in as robust a shape as it was last month. If you had 2 or 3 more numbers like that, we would be concerned with our thesis over the shorter term. But we do think that inflation is definitely breaking. You just went through earnings season, and most all companies that we speak with said that they feel much better about inflation slowing down or even going down in the upcoming period. And they do think that the economy is still muddling along. So with the best information that we have right now is that inflation breaks, the economy is okay, maybe a modest recession, but stock prices start to discount and look at 24 earnings, and we think in that case stocks can continue to do better. We'd be buying dips like you're having.
Well, I should add, you are one of the buyers of Google here on this AI scare.
Yes, we think that they have also spent tens of billions of dollars on this. They will get it right in terms of artificial intelligence. We think last week it was a temporary setback, but they're going to continue to be a player. And the stock's at 16.5 times earnings. So you're getting a great business, dominant market share that invests and has really good management at a very attractive price. So we'd be buying into this scare.